Welcome back to the Stablecoin podcast. This is Luther and Rami. We're co-founders of Stablecoin Partners. Our guests today are Eduardo Novillo Estrada, CEO and co-founder of AgroToken, the world's first grain-backed stablecoin infrastructure used by thousands of farmers across Argentina and Brazil, and Dax Hansen, a partner at Perkins Coie, a tier 1 blockchain lawyer and a regenerative farmer himself in Arizona. Today's conversation is very exciting as we kind of veer away from fiat-backed stablecoins to asset-backed stablecoins, in this case, grain, and also how it's benefiting farmers across the world. With that, Eduardo and Dax, welcome to the show.
Thank you. Wonderful to be here.
Thank you very much, Luther and Rami, for the invitation. Pleasure to be here.
Absolutely. Maybe get us started. Eduardo, your background is really, really amazing, from the fact that you started as a polo player and then you moved into, supporting farmers. Just walk us through that journey. And then Dax, will have you kind of jump in on how you kind of intersect from a lawyer perspective.
I am from Argentina. I come from a very traditional family here. My father is a businessman, but always, since my grandfather, we have been in farming and a lot of contact with horses for all our lives. So polo was in the family from the beginning for us. Was very normal. Every weekend, every summer, every winter, we were playing polo. Then we were 5 brothers that we turned out professionals, all of us. We did quite well. We played all around the world. We won all the most important tournaments, to do it very short. And at the end of my career, I was elected president of the Polo Federation, of the Polo Association, that is the most important federation in the world. And then I started, connecting people and knowing other people, and people bringing me, things to do, like partnerships. And I met my co-founder Ariel Scaliter, that he's been all his life in IT, in technology. He has some exits, and there's where I get involved in blockchain around 2018, 2019. And I fell in love with the technology more than crypto and Bitcoin and all that. And I saw the technology of blockchain, how can affect our part of the world, Latin America, and undeveloped countries. So we started with AgroToken. Really, how we started with AgroToken was a little bit by chance. We had a call from an Ethereum developer in Brazil telling us how we do to uh, give loans or lend money to the farmers in Argentina. So everyone knew that in Argentina we were, having rough time in geopolitical, devaluation, inflation, and all these things, and zero access to credit. So that was the trigger, and there's where we found a way to do it. But that's a little bit of my story. Then I give it to Dax. We met some time ago, and we had a great connection. And he was the other way around. No, he started with the lawyer, then he went to horses. So Dax, all yours.
Sure. Yep. So let me just say, I want to be like Eduardo. So
We all want to be like Eduardo.
we all want to be like
Yes.
Eduardo. Well, and if you get a chance to go to Argentina, then you'll really want to be like Eduardo. I had an opportunity to spend some time with him, and one look at his polo horses and the meticulous care that he gives to them will leave a lasting impression, and it did on me. So I'm Dax Hansen. I'm a partner in the law firm of Perkins Coie. I've been working at that firm for about 27 years. But I come from farming and ranching roots myself, and I'm dialing in here today over satellite internet from my farm in southwestern Arizona, where my grandparents were farmers. They were cotton farmers, and out here at this farm, they also raised quarter horses. My grandpa raised quarter horses in addition to farming cotton. But this is an area that's also been dramatically hit by climate change and hotter and drier climates. It's sort of the epicenter of climate change in the United States. And so I'm working out here with my wife to regenerate this land. We're the first regenerative organic certified farm in the American Southwest, and we're focused on water issues and trying to grow drought tolerant and heirloom crops in a shift, but with the hopes that we can keep farmers, find a model that allows us to keep farmers on land in hot, dry areas as the world changes around us, and to find better business models. And that's where I'd
Mm,
say that I think my background as a payments and a fintech lawyer intersect with agriculture. A lot of what I think you can cast my work over the last 20 years as is regenerative finance. I think that I work to make money and finance better, faster, and cheaper. And so when I saw an opportunity to use these new tools in our toolkit of smart contracts, of blockchain, of instant settlement, atomic swaps, um, I thought there had to be an opportunity in agriculture as well, and in settlement systems, payment systems for agriculture, but also, um, I just admired what Eduardo and Ariel were doing at AgroToken of really solving a currency problem that I hope you let him explain, that uh, actually dovetails nicely with an agricultural ecosystem and agricultural economy. And so we're working through. I think both of us are working through how to improve money, but also how to improve the lives of farmers and other people around us. But yes, I do everything from regulatory counseling to product counseling and the commercial deals, and I'm happy to get into it later, Luther. But I've been involved in many of the most significant digital asset projects since 2010.
absolutely. And our paths luckily crossed when I was at MoneyGram, where you were helping us quite a bit navigate the world, before the Genius Act, right? And so we really appreciate that. I really appreciate that. So coming back to Eduardo, to kind of give folks a sense of what exactly the tokens are. So there's three tokens, right? Soya, Cora, and We. And how do they work? How are they actually benefiting the actual farmers? Can you just kind of walk us through that, please?
Yeah, I'm going to now. Luckily, we are tokenizing more. We are doing coffee,
Okay.
sugarcane. We did energy, renewable energy, now thermal energy. We are going. We are closing a deal to do all that is gas, and gasoline, everything on that too. With YPF. YPF is the biggest, company here in Argentina on oil and gas and renewable energy. But I tell you a little bit of story how we started with AgroToken. Uh, with AgroToken, we did identify a pain that was in the agriculture, but what we did is what we digitalized something that was already going on in the agribusiness in this region. Okay,
Mm,
for you to understand, in this region, we have 50% of the soybeans of the world are grown in Argentina, Brazil, Paraguay, and Uruguay. Okay, so most of bigger than anyone. Uh, in this part of the world, for the last 70 years, the grain was used as a hedge against inflation, devaluation, and things. So if you go to rent a farm here, for example, you want to rent, you agree the price in tons of soybeans, in bushels, in
I see.
sacas de soya in Brazil. If you go to buy a tractor, fertilizers, seeds, or whatever, with the Cortevas, Ingentas, John Deere case in Holland of this world,
Hmm.
uh, the way they finance you the purchase of these supplies is agreeing the price in tons of soybeans too, or corn, wheat. Uh, that is the way this part of the world hedge. No, so 40% of the transactions are done by barter, but it's called barter. No, they
Right. Yep. Yep.
basically what happens is the suppliers, they advance the seeds, let's say the seeds, for the farmer to plant, and they they financing them until harvest, and they agree the price on tons of soybeans. So in that way, they don't have any problem on the valuation, inflation, or all the or macroeconomic problems that we have here. So basically, we understood that the grain was already behaving as a currency. Okay,
Yeah.
they were
Yeah.
already doing it. But until now, before blockchain, they couldn't do that digitally. Okay, so basically, what we did, we digitalized that, and we tokenized that contracts that are the ones that back the token, and by transferring the token, you transfer the right to get the money paid by the traders for that grain. So at the end, is that what we're doing? That methodology that I explained it very easy. Now, what we created is that methodology that now we can use it for any other commodity or real world asset. Look for the documentation, the regulatory, the accounting, all those things. That we did for backing that token, and that was put us in a position now, in a very, very good position to tokenize all other, let's say, real world assets.
That's amazing. I think one of the concepts that I found fascinating is this concept of a proof of grain reserve, where like the backing is actually a metric ton of actual grain. That's amazing. I want to quickly, just for a minute, switch to DAX, because DAX, we live in a world in the US where the Genius Act does not actually account for any sort of commodity based or asset based even. I mean, Mika at least has like an asset base. We are purely in a fiat backed regime here. You're sitting in the US. You're an amazing lawyer that's lived in the US, and you've kind of been at the bleeding edge of some of this technology implementation from a legal perspective. How do you kind of see that world, intersecting? Do you see changes coming down the pike?
Well, I think that we have a wide spectrum of different assets, and while we're focused at the moment in the United States on the Genius Act and really the dollarization of the globe, that there are other assets that fit in that spectrum that I'll call, tokenization, real world assets, that aren't going to be, restricted by the Genius Act. I think that the point is that if you have a dollar, a stable coin that's meant to reflect a dollar, or hopefully some other type of fiat currency, it needs to be backed by a reserve of that currency, or treasuries related to that asset. But we have, outside of the Genius Act, the ability to tokenize all sorts of other assets and investments and commodities that have existed. So tokenizing gold and oil and land and stock and fund interests, right? Like this march is going to continue, especially as we work with other types of heretofore illiquid assets, right? And grain and agriculture outputs have been somewhat liquid, right? There's markets for those, but
Mm-hmm.
what Eduardo and team is doing is making them even more liquid. But I guess so the point I will make is that even though we're talking about Genius Act compliant stable coins, there's a room for other commodities. We just probably can't call them stable coins. I mean, they're not going to be
That's what it
stable
is.
coins with yields on them, but we can trade and settle with commodities, and that's where our commodities and derivatives laws are going to come in. That's where securities laws can come in too. But yeah, I like to think that we're in an era where we're reinventing what money is. I'm going to use that kind of in a broad way, and we've been through phases where even things like NFTs and collectibles were meme coins being viewed as money, but we're sort of in that Gartner hype cycle where we've tried a bunch of things, figured out what's good, and while even like things like meme coins and NFTs are useful for certain things, people realize, well, those actually aren't long term worth that much. I mean, they're highly volatile with lots of speculative opportunities around them. But when you come right down to something that's solid, you're going to end up with things like agricultural outputs and land. And I think that the DeFi platforms are hungry for those types of real world assets. We're seeing them now in terms of like ETFs and fund interests and other things. But I'm looking forward to the day when the real hard assets are coming out of an agricultural system or water, for instance, mineral rights are in people's portfolios, and those assets find their way to the most efficient holders of those as well to create better markets, better efficiencies in those commodities and assets.
A previous guest that we had a really interesting concept. They said future stablecoins or assets of value on chain could actually be off chain compute, right? Because if you think about it, that is what is the biggest need for AI and blockchains is actual compute power. And he was talking about tokenization of computing power. And that is, to your point, we are effectively redefining what money is, quote unquote, for people that are listening to the show. And this is a great example.
Yeah, just to mention an example that's been around for a while, but I was able to work with the company Otoy to create the render token.
Mhm.
That for
Yeah,
rendering, right? And there's been a number of projects that have been tackled, for compute power, decentralized file sharing and other things. And so, part of the question is how do you value those and how do you get to a real fair unit and how does that intersect with fixed supply tokens, right? Like there's all
right.
sorts of economics around those, but the concepts I think are solid and they're sound and being able to um, use things also like tokens for subscriptions, I think is be pretty interesting.
Yeah, no, I completely agree with you. And I think this is where that concept where you're saying, how do you actually measure and make sure that it's auditable, right? Like, I think that part is really key. And I want to come back to you, Eduardo, because this is where when I was reading up for in preparation for this podcast, the proof of grain reserve, and now you're saying you guys have expanded beyond just grains to energy, etc. How are you guys? First of all, like, how are you solving for the auditability of the actual tokens from all these different aspects, the different commodities that you're looking at, and then how is that benefiting the various farmers, which is ultimately your counterparty?
Okay, yeah. I believe just to add something, what you were saying before, I believe 2026 is going to be the year of the stablecoins. Okay, that we are going to have a lot of massive stablecoins from the banks, companies, like Western Union, Walmart, Amazon. We are working on in our space, like Bungie and and Cargill and other companies that they can have their own stablecoin because they have a big ecosystem and flow. At the end, this new monetary system or this currency how that's coded, it's a little bit like barter. I have this that is
Yeah,
represented by this, and we barter, no, we barter this way that it was not possible. That is where we come in with the what we did with the proof of brain reserve is a methodology that we used. We need to find because at the end the technology is going to be a commodity. Okay, everyone will have the access to the technology and more with AI now, no? But to understand how it works the real world and how connects the token or the digital representation of an asset, and that asset can move from one place to the other on the same time. That is the big challenge, okay? And that is what we are resolving. When you transfer a token, how in the real world the property of that asset is transferred at the same time, okay? And
right.
basically that is what is the proof of brain reserve is proof of existence and proof of liquidity given by oracles that are third parties that certificate this. Like in stablecoins you have banks that say that can certify that you have the deposits, okay, or no. no, of much of the National Reserve, but you have someone that is, certifying that you have that deposits. Here is the same. We certify that the grain is deposited somewhere, and that is, as a proof of existence, and then we have a contract, a purchase contract from someone. In a trader, obviously, has to be a AAA, like an Oracle. And when you have that, those two are the proof of grain reserve. Now we added the proof of origin. If you want to add an attribute of sustainability, or organic work practices. But the thing with the token is that you can aggregate or understand all the attributes that you want for that token that can be uh, represented in the real world. So basically, that is the methodology. That is the only way, to do what we do. And sometimes it's not easy because all these industries are not digitalized in many of the processes and many of the operations. Those is the most difficult part, the contracts. The contracts are not digitalized, and each company maybe for one, let's say, for one operation, they have 5 or 6 different contracts, only for the same thing in the same company. So that is the big challenge. And we believe with stable coins, we put an umbrella on top of that. We don't care. We tell them, we don't care how you do it down here. Just use, transact with this, stable coin. So we, little by little, we are going to digitalize from top down.
This is fascinating because ultimately you're bringing the whole ecosystem on chain by using the stablecoins as the gateway drug effectively. So if you do that, then this means that because supply chain finance and commodities trading has always been, quite not rudimentary, but has been quite, it's not like a financial contract, there's more steps in place to provenance and making sure that you've got the suppliers and making sure that it's available. But, as you say, Bungie, Cargill, ADM, there's so many different companies that have worked out workflows in order to cover that provenance and make it tradable and make it fungible. So here, just adding that digitalization layer really sort of enables those farmers to really access those facilities in a much, much cleaner way, I guess. But they have to keep it within the system because I guess if they're getting now paid and microcredits coming in stablecoins, or stablecoins are becoming the transaction currency to pay for the digitalized commodity, how do you incentivize them to keep it all on chain? Because actually, if it goes out of the system, that's not great either. You want to encourage the system to grow on chain. What steps are you taking to do that, or how does the system work in that situation?
No, we basically we are everything that we develop is in house, but we create a methodology that is very simple for everyone to use it. They don't even have to know that it's blockchain behind that. We are not talking about blockchain or tokens. We learned that. That was something that was the learning curve. We don't talk about blockchain. We don't talk about they use WhatsApp and they don't know how the WhatsApp works. So we are trying to do everything very smooth, very on WhatsApp. Today it's easier in this part of the world because more in Brazil and Argentina, it's a lot of adoption of wallets. So digital payment here is very advanced, more than US, a lot more than US. Pix in Brazil is, you have 150 million users already. So it's maybe Brazil is the most digitalized or bancarized country in the world, maybe now. Argentina use a lot of Mercado Libre, that is Mercado Pago. Everyone use Mercado Pago now, on the phone. So what we do is via API, we integrate with that. So we do it very, very easy for everyone. Now we even almost don't talk about that. But the advantage is not only for the farmers, it's for all the ecosystem, for all the supply chain. Now imagine that that even the supplier, you have supplier 1, supplier 2, supplier 3, the supplier 3 or supplier 4 are getting a stable coin that is backed by a AAA, by Bungie. They don't get the payment from supplier 2 or supplier 1. They get from the number 1, from the AAA, from the best credit that they can have in all the supply chain. So that is fascinating, So we keep the health of the whole supply chain, and everyone has access to better credit. Better interest, better credit because of that. So I think that is the most interesting part and usage of this, because at the end, all these industries, they need credit, and this is the use of stablecoin will bring a lot of access and better credit to everyone too.
Remy, to your question, right, about like trying to grow the on-chain value, I think is what's fascinating about AgroToken, JustToken is that they're dealing with consumable, perishable assets, right? Like I tokenize gold, and gold always stays in existence. It doesn't go away, right? Like you might redeem it, but with grain, and corn and soy, it's meant to be used and consumed, right? And so I think that's where, like, that it's functioning like a stable coin. Well, and let me just make the point that Eduardo may drill down on, but like the peso doesn't work very well in Argentina. Okay, that as soon as the taxi driver receives payment, it starts devaluing, right? And so there's a currency problem that's being solved with a token that represents a unit, a measure of corn or soy, right? And yes, that could be in the farmer's hands, it could be in the grain elevator's hands, but it could also be passed all the way down to the taxi driver, who could stay long on grain, and everyone can stay long on grain until they need to get into a fiat currency or go into some other digital native asset, right? And so, whereas a lot of times in the United States, people say that blockchain is a solution looking for a problem. What's been fascinating is that there's a real world problem in Latin America and in other places where money just doesn't work nearly as well as it does, or currency doesn't work nearly as well as it does in the United States and in some other countries. And so as you work through that, like it's not like that. I don't think that the goal is to create massive, capitalization of AgroToken. The point is that there should be a one-to-one correlation between the grain that's grown and then the grain that's sold and consumed, and so it can be burned off of the ledger easily, right? And so this onboarding and offboarding is a real valuable innovation for things that get consumed. But also interesting to me is that, as you point out, sort of the ecosystem, Remy, right? Like the entire ecosystem is coming in because of the stablecoin. Well, it's the agricultural producers, it's the grain elevators, it's the middlemen, the brokers, it's the financiers, it's the payments companies, right? But in many ways, like these grain elevators and operators, even though they've already been dealing in certificates of title and warehouse receipts, I think they're starting to intersect with like trust banks, right? Like their role as grain elevators, as warehouses, is starting to look much more like a BNY Mellon or a State Street in terms of the types of assets that they're custodying, that they're monitoring, the record keeping, or that they're tracking on a ledger where it's real time. And we're moving in this way with things like securities, where there's 24/7 trading. You don't necessarily need to have a transfer agent in the middle, right? I was on a panel the other day where we're talking about like banks are becoming tech companies are becoming banks. I say grain elevators are becoming digital asset custodians.
Fintechs, they are becoming
Fintech.
fintechs.
Yeah.
Yeah.
They have a revenue because every time that stable coin is transferred, they get 1% of that. So now they are getting 1% revenue with 95% margin. What they do
Crazy.
now, if they have 1% or 2% revenue with 1 or 2% of margin. So basically, that's exactly what you said, and it is my pitch for them. You are becoming a fintech. Now you become a fintech with all the flow that you have. You become a fintech.
Yeah, it's fascinating. Yeah, I'm just trying to couple of things I want to unpack it, Dax and Eduardo, because you covered some really, really interesting points there. And I think what's a really elegant solution that I've seen from what you've described is that by marrying a perishable good with a digital ledger, with an on-ramp and an off-ramp, you're effectively allowing that asset effectively to live on in a much better way. The velocity of that asset is much more transferable, much more easy for it to interact all the way through the system. A perishable good with a supply chain payment, this could only go one or two levels. Now it can go all through the ecosystem relatively quickly with velocity, and therefore keep as much value as possible. So that's fascinating. And then I resonate with what you both mentioned, which is there's no surprise that there's a higher proportion of adoption in Latin America, and I would actually say this extends very much to Africa as well, where banking doesn't work, but there is numerous commodities being produced in these countries, and immense wealth actually in these countries from those commodities, but they're not able to just access the system. They aren't able to get the credit. They aren't able to make the economics work because they're structurally left out. And then you add in currency devaluation, in these regions. I think Luther and I were both at a Stellar conference in Argentina, in Buenos Aires, wasn't it, a few years ago? Do you remember? You walk around, it's one of the most beautiful cities in the world, and there's cambio. There's 3 different exchange rates for the peso. And there's devaluation of 10% a month. It doesn't work, so how tying it to the commodity, which is actually more structurally sound and a better currency, as it were, for these people in those regions is a game changer. So yeah, and I think to your point, Dax, like I'm thinking about, that's great that we get accelerated adoption in the areas that need it because there's a currency devaluation, but it works very well in America as well. I think it's equally applicable, even though the dollar is of course a strong currency and there's a adoption there, but I think for the farmers in the credit space and the credit regurgitation space, that's where I think they get the real upside of this.
Well, let me just make the plug for the U.S. farmer, right? Like that many farms they're operating on razor thin margins, right? Input costs going through the roof. Land quality is degrading, right? Farmers in the United States need innovation, right? And so what I'm super excited about is that while there's a real currency need in Latin America that's being solved through these innovations and these business models that are being stitched together by the relevant players, that whole process can be brought, and maybe it's not solving a currency problem, but it's solving a grain financing problem, a farm financing problem. We're able to accelerate the pace at which farmers are able to sell their crop, right?
Right.
You're able to bring different gradations and certifications and provenance to those crops to reward different types of techniques, right? Like, right now, glyphosate is all the buzz. Everybody's thinking about, well, is glyphosate on my grain, right? Like that these technologies bring the ability of third parties also to certify. You just imagine something like a grain test, a lab test, an analysis, protein level, what sort of chemicals are on this grain, whatever it is, that can be brought in and actually just anchored to that same lot of grain, for instance, right? We can use blockchain technology to allow for people to find different crops. Right now we have soft, white, hard, red wheat. Imagine if you can have, and those are speculated with on the open commodity market. What if you had 10 different gradations right? That just opens up new avenues for farmers. So yes, I'm saying that I firmly believe that these innovations that are happening down in the, I'll call the global South, to solve currency problem, investment problems, are going to come to solve, real business operational problems in the United States, for instance.
Well, yeah,
Yeah.
I definitely
And
agree with that. And I would say that, like, say, effectively, if you think about how long it would take for a new contract to be set up in the Chicago Mercantile Exchange, which is where all these guys used to come and hedge or trade or finance their commodities, they'd go to the CME or they'd go to the CBOE or they'd go to these sort of financial houses. But the time taken, there's not that many contracts. It's one contract or two contracts per variation of commodity. What you're saying actually is there's now the ability through this technology to really offer a very customized set of quality contracts, specifically focused on a particular set of characteristics that can be priced accordingly because they're different,
Well,
and therefore monetized.
yeah, it can be priced and you can do forecasts. So just imagine if, for instance, all of this innovation intersected with DeFi, and imagine that DeFi was as widely used and consumed as, international remittances, for instance. I mean, Luther mentioned MoneyGram, and there's these apps and all sorts of other companies that are doing non-custodial wallet remittances that are allowing receivers to hold on to stable coins of dollars rather than going into their own local fiat currency that may be devaluing. But what if you're able to add into that mix things like corn and wheat and soy, right? By the way, which you might be able to receive actual delivery of. Just imagine right now we're in the middle of an oil crisis. Imagine if we had the infrastructure lit up so that all the producers of oil, right, were on a system like this where we could buy, I'm running diesel engines, pumps for my irrigation system out here. If I was able to buy in advance some diesel to know that I could actually get delivery of it, right? Same thing, it's on the hedging. So it's like this is Web3 at its finest, right? Where
right.
the infrastructure, you mentioned the CME and all these other exchanges, right? It had been the provenance of traders for decades. Well, like institutional traders. Now imagine that getting right down to the typical farmers and the homesteaders and the preppers and just everybody who needs to interact with real world commodities.
Yeah. No, that's spot on, Dax. And I think as we are starting to wrap up here, Eduardo, like, can you just maybe walk us through what is the intersection now with the tokens that are coming out of AgroToken and the existing stable coins, right? Like say USDT, USDC. Like, do you see that interaction happening? And is that how, effectively on-chain FX is happening maybe today?
I will say that will be coming now. The first thing that will be coming is going to be, cross-border payments, stablecoins, sure, like Doug said. We are working on that, on some solution for Bungie, Cargill, for those guys, that they have a lot of that with USDC, with USDT. I have a little bit of a story. Not many people know, but one of our, my founders and friends is from Adeco Agro. Adeco Agro is the company that Tether bought. Tether bought Adeco Agro, so it's part of AgroToken by chance. But basically, yes, I will see that interaction that will start to happen, no? Like banks, they will issue their own stable coins and they will accept the let's say the stable coin or the grain as a collateral anytime. They're already doing it in fiat, but I will see that will be the usage, the first use of this interaction between stable coins backed by currency and stable coins backed or tokens backed by representing real world assets. I believe that is the next part. At the end, what we are doing is we are these real world assets, we are transforming them in financial assets. Okay, so they can be moved as any other financial assets that was before. And that is what is coming, and usages are going to be the same, secondary markets, hedging, securities, credit, all these things that are done now by other financial assets will be done more normally with real world assets, tokenized, and will be transformed into financial assets.
Fantastic. Gentlemen, thank you so much. Where can people find you? Dax, we'll start with you.
PerkinsCoie.com. Maybe just a quick note. Perkins Coie is merging with Ashurst in
Congratulations.
July. So as of July 1st, we will have, I think, 52 offices in 23 countries, and we're going to be 3,000 lawyers focused on energy and infrastructure, financial services, and technology. So I'm excited personally about the opportunity to globalize the fintech and the blockchain projects. I will be able, even though I've been working with local counsel in many jurisdictions in the past, I'll be able to actually see those projects through to completion on a global basis as this expands. But D Hansen at PerkinsCoie.com. You can find me on LinkedIn and X and other places too.
Huge congratulations, by the way, on that merger. And for folks listening, I worked with Dax, especially, as I said earlier, at MoneyGram. Hands down, one of the best legal professionals when it comes to understanding the deepness of blockchain and digital assets, and then providing great advice from that perspective. So thank you again, Dax.
Thank you.
Eduardo, where can people find you,
You
sir?
can find me, Eduardo, at JustToken.com. That's my email now. We passed from AgroToken to JustToken. Now we are doing all these, all these other assets. And thank you guys for this time. It was a great talk. And I would love to talk next time because Dax, as you said, Luther has one of the people that knows more about, Web3 and all and crypto, blockchain, and all that. So it's always a pleasure to hear him and to see what is coming next.
Absolutely. Thank you all very much. For everybody else, stablecoins don't have to be backed by dollars, as you can see. In the fields of Argentina and Brazil, grain-backed tokens prove that the most powerful financial innovation solves real problems for real people. Like and subscribe, and if this was valuable, please share it with a friend, and see you on our next episode. Before we wrap up, a quick disclaimer. The opinions expressed here are those of the hosts and the guests and do not represent the views of their employers or affiliated organizations. This conversation is for education purposes only and should not be taken as legal, financial, or investment advice.